Oh, good evening, everybody. Welcome to our stock seminar. Today, our topic is on the opportunities of this stock market crash. So, what happened when this month there is interest rate rise as well as ongoing war? Okay, that's now happening in Russia and Ukraine. Most likely, you want to find out what may happen this month, right? So, do welcome, join us, join our live event. If you are from YouTube Live, can you please say hi to me in YouTube? And by the way, we are also having a Facebook Live. So you are in Facebook. Can you please give me a thumbs up? Okay, let me know who you are. I'm seeing the names coming in. Edwin, how are you? Okay. Yu Gang Shi, Okay. Sean Pang. Okay. Welcome. Hannah Vo. Welcome. Hi. Okay. Welcome. So you have in the room. Can you please say hi to me? Thank you. Karina, okay. Hi, Peter, John, Maverick, okay. Wow, so many, okay. It's running now. Kelly, how are you? Okay. Zhao Beiqing, okay. How are you? Okay, welcome. I'm sure all of you will know, okay, that US stock market has been suffering. In fact, not over the last 1 month. In fact, across the last 6 months, okay. 6 months ago, there has been a lot of discussion. Wall Street has been talking about interest rate rise because of this inflation problem, okay? And indeed, November, I would say it's November that Federal Reserve admit, okay, that this inflation is really getting out of control. And that's why they started what we call the tapering process, whereby every month they are slashing down on the printing of money, okay? And I guess, okay, most likely, okay, by this month or next month, the tapering will end and they will kickstart, of course, okay, the interest rate hike, okay. So a lot of people are so frightened by the stock market. There's a lot of fear boiling up, okay. So Wall Street has been dumping a lot of tech shares, okay. Some of you know, especially the high growth tech stocks, so-called the Cathie Wood stocks. Most of it has fallen almost, okay, I would say 50 to 90% is value. That is a tremendous drop, okay. That's a tremendous drop, okay. Never have I seen tech stocks fallen so much in a bull market. I still consider today we are still a bull market because there isn't any recession. We are still getting out of COVID, okay. We are still so-called getting out of this semi-lockdown phase, okay. So most likely economy will recover, okay. But why is it that stock market has really crashed so much? Is there opportunities for us to buy this year, okay? So this is a topic for today. So if you're in the room, can you please say hi to me? Hi Penang Lang, hi Patton, hi Ku Chong Ping, okay, Jiamin, Monicam, okay, hello. And in the YouTube live, I saw a few names, okay. Let me read out, okay. Wally, KH Low, Sing Chu Chai, okay, hello, okay. Marilyn, Lee Poi Hun, TP Su, and Outdoor Pie, okay. Thank you for visiting us today, okay. Today we are going to cover a bit of outlook of the stock market, okay. So let us perhaps take a look at the major indices in US, okay, the major index in US. So of course there are 3 major index in US, and the most influential of them is S&P 500 index, right? So let's take a look what happened to S&P 500. As you can see, in December, end of December, S&P 500 index, of course, the index I'm looking at is the futures index of S&P now. It's already open. Okay, the market has opened since Asia morning. Okay, so today at least, okay, S&P is recovering. Okay, thank God. Okay, now it's at 4,326 point. Today increased by 22. Okay, 22 point. Okay. So you can see that ever since December, it hasn't been good. S&P 500 has tanked from almost 4,008 to as low as, I think, last week, 24th of February. If I'm not wrong, that is the day that Russia announced war on Ukraine, okay? And funnily, okay, ironically, okay, I would say that the moment they announced the war, it did bottom, okay, at 4,100 point, okay. That day, of course, in the early morning, it went down. Then it recovered very strongly, okay? So it almost dropped like 700 points across the last 2 months. Okay, that is unprecedented ever since the COVID crisis, okay? 2 years ago, in March, okay, because of COVID, because of lockdown to the whole world, S&P 500 tanked almost 33% its value, okay? So this is the COVID crisis in 2020, right? From almost 3,400 points, it dropped to 2,002. In a span of 1 month, it dropped 33%, almost 1,200 point drop, okay? 33% is value. And ever since that day or that month, we haven't seen such a big correction of somewhere in the magnitude of 10% until now, okay? Until now, okay? So the last 2 years, it has been magnificent, okay? It has been already 2 years, by the way, okay? Already 2 years since the COVID crisis, okay? And this is my take for you. If some of you has been lamenting, okay, that you have missed out the opportunity to buy great stocks 2 years ago in the month of March, okay, if some of you pay attention to our Facebook Live, you can see some of my comments in March, right? That day, when it bottomed, on the 24th of March, I say it's time to accumulate stocks, especially tech sector, especially the tech stocks, especially the good tech stocks that will be in the trend in the next 5 to 10 years, okay? And that I mean Tesla, the self-driving technology, Nvidia, the 5G designer of chips, okay? And a lot of tech stocks, okay, including Apple, because they are going to launch their iCar, okay? And if you have missed that opportunity, I would say you missed a terrific run. Because ever since that day, Tesla went up 20 times its value. Nvidia and okay went up multiple times. Same with Apple, okay, same with Amazon, okay, all the e-commerce companies, okay, so on, it goes up so much, okay? So if you lament that you are missing out the game 2 years back, I would say now is the chance, okay? Now is the chance. So today, my job is to give you some optimism, okay, amid all the pessimism, whether is it interest rate rise, inflation fear, okay, or crude oil fear, or whatsoever, okay, or Russia fear, okay, whatsoever. I would say now is again 2020 March. Now is again 2020 March, okay? So if you miss out, okay, 2 years back, if you miss out the day I called when it was bottom, by the way, how do you know whether I call whether there is a bottom, right? All you need to do is go back to my Facebook page, okay? Just in case some of you are still not following us, okay? This is my recommendation. If you want to know more insights, more tips, okay? As in to know about my opinion about the stock market. Of course, you do your own homework, okay? My opinion is purely based on my experience, okay? But, okay, let's say you want some help, some opinion about stock market, knowing what may happen in the next few months or even years, do pay attention to my personally managed Facebook page, okay? And don't go to any other page except mine, okay? There are a lot of what we call people who want to impersonate me. Recently, I found out, okay, there are like more than 5 or 6, okay? So make sure you follow us, okay? Follow the right page, okay? All you need to do is go and search, okay? Go and search in Facebook. You can search the name Daniel Low or Daniel Low Investment Group, okay? Daniel Low Investment Group. This is my official page, by the way, okay? And by the way, there are really some impersonators trying to fake me, okay? So what they do is they actually crop, okay, crop the picture. And of course, you can see it's a crop picture because it will enlarge itself so large that it's out of magnitude, okay? So whatever my comments, by the way, sometimes I do give comments, they will go and crop the picture and put up in their website, okay? And try to fake us. Of course, if you see such pages, okay, just report it to Facebook, okay? So make sure you go to Daniel Low Investment Group. Okay, let me magnify this place. Just in case this is the first time you see us. Okay, let me use a software. Okay, all you need to do is okay, make sure you go to the right page. Okay, this is the largest page that I actually personally manage. Okay, all the others are actually for advertisement. Okay, so Daniel Low Investment Group. Okay, and you must see there are 27,000 followers. Okay, beside or underneath my name. Okay, underneath my name. You know what happened? The last Facebook live that I did before Chinese New Year, I said don't ever go and believe any website or any page without 27,000 followers. And guess what? Today I find out there is a page that said they got 27,000 followers, exactly the same as me, okay? But they write it under their name. So you will be misleaded to think that they have 27. No, that is just a name, okay? So make sure underneath the name of Daniel Low, you really see this 27,000, okay? And these are not Africans, okay? So I saw that 27,000. There are some 1,000, 2,000 followers, but they are not Singaporeans, okay? They are not Chinese, okay? They're from don't know which country. So make sure you follow the right page, okay? That's the first thing, okay? So you can always scroll back to 2 years ago in March 25th. Of course, I tell you this not really not to boast, okay? But I think that this is really a chance of a lifetime. If you miss out this tech stocks crash that has happened over the last 6 months, okay? Some tech stocks, giant tech stocks, okay, like Microsoft dropped 20%, okay? But small or mid-cap tech stocks has tanked more than 50, okay? Look at Square today, look at PayPal today, okay? Look at Coinbase today. And these are not suka tech stocks, you know. They are so-called, okay, the high-tech growth stocks, okay, high growth tech stocks that might be in trend for the next 5 years. They are like the disruptors, okay? So like fintech, okay, disruptor companies, okay, finance technology, okay, PayPal is one of them, Square is one of them. They have really tanked. Let us take a look. Okay, how much? $290 Square. Okay, of course they rename it to Block Incorporation. Okay, $290, it dropped to as low as 83 bucks. 83. 290 dropped to 83. And today we are not even in a bear market yet. Okay? We are still in the bull market. We are still in a recovery phase. We are still recovering out of COVID, out of this Omicron. And people are willing to fly, okay? In the next few years. They are willing to spend money, okay? And I can't really believe it. It has already dropped more than 60%. But guess what? That is a good earnings. This is a marvelous earnings. Let me tell you. This is an earnings that suddenly caused the stock to gap up. Okay, caused the stock to gap up in the last 3 days amid all this uncertainty in regards to war, inflation, interest rate, or whatsoever. Okay, it gap up from 85 to as high as 120 or 120. It reached almost like 130. So there are some signs that tech stocks has already gone down to a value so low that is below market expectation. Just a little bit of positiveness in the earnings can cause a big gap. Okay, $80 it jumped up 120 just like that. 33% jump in one single session, one single day. So what does it show me? Okay, so not only at Square, by the way. Okay, look at Xylo. Same thing, okay? This company is a AI property website, okay, just like Property Guru. $200, it has fallen 75% to the bottom, okay? I would say almost 75, okay? $46, okay? $46. And guess what? Because of good earnings, it suddenly gap up. Because of good earnings, it suddenly gap up from 46, it reached $55. And of course, it continued its jump, okay? It continued until it reached a figure of 65 before the correction, because the last few days it has been there, okay? Russia-Ukraine thing has caused it to fall a bit, okay? But I would say that most likely it won't go back to that price again of 40 something, okay? Look at this stock called Upstart, right? Upstart, another high growth tech stock. If some of you know, Upstart. Okay, this stock similarly, it has dropped almost $400. It dropped to as low as 73. That's almost a how much drop? That's almost an 80% collapse in price. 80% collapse in price. I can't believe it. Okay. But guess what? Because of that good earnings, good and powerful earnings, amazing earnings. Okay, please take note. Okay, 90 cents earnings per share against the analyst estimate of 18 cents earnings per share. And if you don't call it good, I don't know why it's good. That's almost like Tesla 3 years back. Okay, four times more than what the analysts expect. It's a positive surprise by 4 times its value. Okay, and that's the reason why this stock jumped up 50%. 50% is share price after the earnings. Okay, so don't tell me there's Ukraine problem, there's Russia problem, there's interest rate going to rise. There are stocks that actually recover because of great earnings. Okay, this stock jumped 50% in one single day. And by the way, yesterday it went up to as high as 160. Perhaps a bit of drop because yesterday crude oil went up to almost $110 and it's hovering at that price. Okay, but would it go back down to 100 or below? I think not much possibility. Okay, not much possibility. Okay, and there are a lot. Okay, I have no time today to explain to you all these high-tech growth stocks. Okay, but of course, these are the high-risk stocks. Okay, when we talk about high growth tech stocks, okay, basically they're at risk. People are afraid, okay, that interest rate will rise will cause them to lose on their profits. Okay, most likely because they need to pay the debt, the money that they borrow from the banks to expand their businesses. Okay, because they're incurring a large expense. Okay, that's what people are afraid of. Okay, but let me tell you, this is bullshit. Okay, this is bullshit. Okay, before COVID, okay, or 10 years before, the last 10 years, okay, before COVID ever happened in 2020, okay, Wall Street are not complaining about high growth tech stocks earnings announcement, okay, are not complaining about their profits. Okay, they are only complaining is the subscriber growing by leaps and bounds. They are complaining what's the volume of transaction. They are complaining what is the revenue that you generate for e-commerce, even though you are a losing company. Okay, even though interest rate has been rising ever since 2015. By the way, interest rate did rise from 0% to 2.5%, the peak. Okay, from 2015 to 2020. Even though interest rate rise, they are not dumbing the tech stocks. They are not dumbing the Amazon. They are not dumbing Apple. They are not dumbing Nvidia. They are not dumbing Netflix. Those were the days. Those were the times when interest rate rise. So let me tell you something. What happened the last 6 months is that Wall Street is trying to create a bluff. Okay? Pardon me, I think it's conspiracy theory. Okay? Wall Street is trying to bluff the whole world that interest rate rise fast is going to dent their earnings. Not really. I don't think it will dent much of the earnings. Even if this year interest rate rise by 4 times, I expect to rise by 4 times, okay? Interest rate to rise from 0 to 1. I don't think Upstart cannot pay the 1% interest. They have great earnings. Their earnings announcement is 4 times what the market expect. It's almost like Tesla 2 years ago. It creates such a euphoria, okay, in the stock that a lot of people, fund managers, start to pay attention to such shares. And let me tell you what is happening in Wall Street today is that they are trying 6 months ago to do their hedging. Okay, so can you please repeat after me? This is a story that is created by Wall Street 6 months back. They are trying to hedge their position by selling. Okay, can you write down the word called hedging? Okay, this word is called hedging. Yeah, right. Okay, funds are flowing from the high price shares the shares that already increased multiple times its value, the high price share that has already increased in the COVID year in 2020. If you miss out on Tesla, it has gone up 20 times its value. Zoom has gone up 10 times its value. It's unimaginable that a stock like Zoom, which is not making much money, in the COVID year, in March, it was at almost still at $80, okay, somewhere around $80 in the COVID year, right? It gone up to 588 in a short span of not more than 1 year, right? It's almost like how much? March to October. March to October is how much? Maybe 8 months, 9 months. It went up 7 times its value in 9 months. What do you expect? Those hedge fund managers that invest in high growth tech stock, they already make multiples, right? So what they do? They think it's too expensive already. I would rather go for value stocks. So these two words are the words that, okay, Wall Street is always hedging against each other. Okay? When one gets cheap and the other get expensive, funds will flow there. Okay? So in 2020, the stocks that ran are the growth stocks, are the stocks, like Tesla, NIO, okay? Maybe they are not making much money, but they so-called create such a high expectation. People are talking about 5G at the time, right? So it keep on running crazily. People are talking about e-commerce. People are talking about, okay, I mean, buying gym, okay, buying a bicycle gym, okay, and put in your house called Peloton, right? So this stock was I would say, it's the stock that epitomize, okay, I would say it really, okay, tells me a lot about this COVID, okay. A stock that is almost $17, it went up to $171. This is called Peloton Interactive, whereby you can interact with your gym bicycle, okay. You buy a bicycle and or you rent from them, okay, put in your house and you keep on cycling, okay, while talking to your gym instructor or seeing the video, right? So this is the gym bike, okay. It went up 10 times its value. So it went crazy. Wall Street already made a lot of money. They buy in March. They almost, okay, went up to, okay, the all-time high of 171 by the end of the year. They already make 10 times its value. Any stock that goes up 10 times, there's a chance it will crash, right? Okay, that is the logic of stock market, okay? And that's why they took this opportunity. I would say it's a chance for them to liquidate some of their positions. And it got started in June last year. It got started because they hear from the economic reports that there's hyperinflation. There's hyperinflation because the inflation figure reached 5 and it carries on from there to sustain above 5%. By the way, how do you know whether there's hyperinflation? All you need to do is open the inflation figures and take a look. Okay, I always like to go to this website. Okay, US inflation rate in tradingeconomics.com. Okay, by the way, I click on it. By the way, sorry that today I may not have much time with you. Okay, so hopefully we can end in the next 30 minutes. Okay, so bear with me. I'm not going to answer much questions from you today. Okay, so look at the inflation figures. Ever since the mid of last year, it hovered more than 5.3%, and it was almost like a support there or resistance there at 5.4. It did not break up, it did not break down, right? It was hovering there for almost like 4 months. But Wall Street is betting, and if some of you pay attention to my Facebook Live, I always say the second half of the year, people don't realize it because it's festive rally, inflation will surely go up, okay? And that is really true. People rush in Christmas to go and buy the Christmas tree and find out that Christmas tree is docked inside the cargo, okay, in the port, okay, cannot so-called unload, okay, because there's no truck or whatsoever. Basically, the labor is in shortage, okay. People are taking their break, going for big Christmas, okay, holidays and whatsoever, okay. That's why Disney, okay, have a good earnings. But everybody go and spend. There's huge demand of goods, okay, and second half of the year is the period whereby US no longer care about wearing masks anymore, or no longer care about COVID anymore. They just let go. Okay, so basically it's like, okay, a heaven. So there's great demand but lack of supply. There's a supply block. Okay, a lot of products are manufactured but docked in cargo container, cannot unload. Okay, so these two things are the thing that cause this. It caused what we call a breakout. Okay, in chart we call it a breakout. 5.4% broke out of this resistance line. Okay, 6.2, 6.8, 7, and today 7.5, the latest figure. It broke out. Okay, Wall Street win, I would say, the first half of the soccer game. Okay, they won the bet because they shorted the high growth tech stocks and bought the value stocks over the last 6 months. So what are the kind of value stock? Basically, these are boring stocks, as boring as McDonald's. How many of you buy McDonald's? Okay, it did not correct much. In fact, okay, 270 today, you can still buy it at around 240. Okay, McDonald's before the Ukraine crisis was still hovering at 260. It's almost like a $10 drop. Okay, so compared to a 50% collapse, 60%, this is nothing. This is almost like a 15% correction. Okay, Coca-Cola, it was still hovering at a high point. Okay, it's $62. Almost no drop whatsoever. Oh, this is like a 50-year listed company. Okay, so Warren Buffett company are mostly value counters, right? Pepsi Cola, okay, yeah, it dropped 177. Today you can still buy it at 162. Or maybe, okay, ExxonMobil, I considered is also a value stocks, right? Okay, traditional stocks, okay, the number one in the oil and gas company. So even without the Ukraine-Russia episode, okay, it's still hovering near its high point in December at 65. There's absolutely no drop at all, okay, at the start of the year. So what happened is people are dumping those stocks that already increased 10 times to buy the stocks that hasn't increased much yet. ExxonMobil did increase maybe, okay, one time, 100%, but $30 to $60. It's nothing compared to Zoom, nothing compared to Peloton, whereby it increased 10 times. So what I want to explain to you is this is the scenario. Ever since last year, the second half of last year, there has been a fund shift. People are shorting the high growth tech to go and buy Walmart, the value stocks, okay, McDonald's, Pepsi Cola, something that we wouldn't ever want to buy. The YouTubers wouldn't even want to discuss. I haven't seen a YouTuber tell me, okay, 2 years ago or 1 year ago or last year to go and buy McDonald's. Am I right now? How many of you want to go and buy McDonald's stock? Okay, it's almost like a dead stock. Walmart is almost like a dead stock. Okay, you want to buy the cheesy stock, right? You want to buy the sexy stock. You want to buy a stock that will increase 10 times, right? So that is the thing. And this is what is happening over the last 6 months. Okay, and of course, taking a look at S&P 500 index. Let's take a look at S&P 500 index. Okay, this is S&P 500 index. I want you to take a close look at this index now. Okay, ever since December, it has fallen 4,008 to the lowest point of 4,001. Okay, it has fallen almost 15% its value. Okay, a 700-point collapse divided by 4,008 is exactly almost the 520 point. And if some of you have been paying attention to our Facebook Live, today I want to share with you what will happen in the next 1 month in March. Okay, take note. Okay, take note. My forecast is that you may have already seen the bottom. Okay, seen the bottom of S&P 500 at around 4,001. There's a strong support there. Barring, of course, any unprecedented thing that happened again in Russia and Ukraine, unless there is something going on, unless Europe or NATO really go full out and go and save Ukraine, go into a war, okay, head on with Russia, unless that happen. Okay, of course, I'm not a politician, okay, but this is my guess that it won't ever happen. Okay, most likely there will only be sanctions. So if there are only sanctions, okay, and basically it's almost like really, okay, what we call all talk and no action. Okay, basically, okay, they are just talking and talking and talking. They say support, I support you, I support you. Okay, but they are basically doing nothing except sanctioning. Okay, so if this really happen, I expect a recovery. So if some of you are really worried, okay, I want to introduce to you, this is my CRS indicator. Okay, there is a certain resistance here in March. Okay, these are the two lines. I want to share with you that there's a resistance somewhere around 4,360 point for S&P 500 this month. So if okay, this month in the next few days, if it can stand above, that means the whole candle, if you see one daily candle, it stand above 4363, this figure, around 4363, this figure, most likely it would indicate that the bottom has already been confirmed. I would recommend you to accumulate some good shares. The tech stocks already crashed, okay? Don't miss out on this chance. 2 years ago, if you did not buy the great tech stocks, boom, don't miss out on this recovery, okay? I expect this second half of the year, all tech stocks to recover. All, I mean all, okay? The big cap stocks, your Microsoft, your Nvidia, okay, the Facebook, the FANG stocks, okay, the mid cap stocks, okay, the penny shares, okay, that you don't want to see now, okay, those that have fallen 80% its value, the Cathy Wood stocks, almost all second half of the year will recover, okay? So don't miss this chance. So this is my take for this month, and let us take a look at NASDAQ. I'm more interested in NASDAQ because NASDAQ consists of tech shares, right? So let me take a look. 16,767 is the highest peak of NASDAQ composite. Okay, I'm looking at the E-mini, okay? It has already dropped to a few days ago, 1,003. 1,003. Of course, same thing, barring, okay, any unusual activity that happened again in the Russia-Ukraine episode, okay, if there is none, if there's none, and it is a short-term war, I expect it to be a short-term war. I expect, okay, Ukraine to surrender one day, okay, I expect it to happen, okay. If this is a short-term war, I would say this day might be the bottom. There is a great chance that this day, 24th of February, the day Russia declared a war, that is the bottom. That is the bottom. And if I were to give a more bolder prediction, I would say that in the next 3 years of bull market rally, I expect this bull market to last for 3 years, by the way. That may be the bottom in the next 3 years. That is a very bold prediction, okay? And let me explain to you the reason why. Of course, do your own homework and due diligence, by the way. Okay. Today, I want to teach you or share with you one experience I always use to know a bottom of a market correction. Okay. So, you just need to learn this to find the bottom of any big correction or crash. Okay. So, by the way, if you want to learn the answer, can you please say yes? Okay. Yes in the comment box. I will share with you. Okay. Please say yes in the comment box. Okay. Give me some answers, okay? So the more yes there is, the more I'm willing to share, okay? So please give me some yes, 给我一些 yes, 好不好? Okay, give me some yes. I don't know whether you are commenting, okay? Basically, my comment box is stagnant, okay? So, yeah, just give me some yes so that I know you are here. Okay. Yeah, I saw it. Okay, I saw it now. Okay, finally. Okay. Thank you for all your thumbs up and loves. Okay, thank you. Thank you for your yes. Okay, I think my Facebook is suddenly stuck. Okay, the comment box is stuck. Okay, but I can see the YouTube, a lot of yeses. Okay, Robin, thank you so much. Pun Hui, okay, Wally Ang, okay, thank you so much for your yes. Okay, thank you, okay. So can you please write down? This is a rule that I always stick to in a bull market. I need to emphasize, it must be a bull market. There shouldn't be any recession that's happening, okay? Don't tell me there's a recession, okay? A recession, it doesn't matter, okay? This rule doesn't apply anymore, okay? It's what I call the 10, 15, 20 rule. So can you please write down in the comment box 10, 15, 20% rule, okay? The 10, 15, 20 means the percentage, okay? The 10, 15, 20 rule, I call it, okay? In a mild correction, in a bull market, there will be definitely months whereby the market will correct, right? Market can't run forever for 5, 10 years. Okay, every month keep on going up, right? One day, okay, one day it will correct, right? So in a mild correction, the market will always correct 10 to 15% from the peak of this bull market. So all you need to do is go and find the 3 index, okay? All the 3 index in America, or any index by the way, okay? In a mild correction, okay, it will be 10 to 15%. And I will say that in the last 12 years, ever since Lehman Brothers collapse until COVID, okay, in the last 12 years, okay, from 2009 to 2020, there has been a lot of corrections. Almost every year you get like 1 to 2 corrections, almost every year, okay? So it can be a Donald Trump election and suddenly it dropped 10%, okay? It happens, by the way, okay? There can be, for example, Egypt government overthrown and dropped 15%, okay? So it can be Europe crisis that really happened in 2012, it dropped 20%, okay? But I would say a mild correction is in between the range of 10 to 15. Every time an index drop 10, there will be some support there. The next level of support will be at 15% from peak. And the last level of support in a bull market will always be 20. And make sure at 20, you try to accumulate some shares. I do understand you're paranoid, okay, because you see the media, they keep on showing all the Ukraine picture. Today I go to Channel News Asia, almost, okay, they are talking to you live. What is happening 1 hour ago? What's happening to Russia? They are invading Ukraine, Kiev, okay, they are invading their capital, okay, Kiev. So a lot of news, okay. And definitely, after looking at all this panic news, you open CNBC, there's reporting here and there, CBS, okay, CNN every day, okay, talking about all this, right? And they have live news, shooting, okay, at the people, okay, being bombarded, okay, the building bombarded. You definitely won't go and buy the stocks, right? You won't buy your Apple, you won't go and buy Microsoft. You say, Daniel, you're mad. You're mad. And let me tell you, in 2020 March 24th, I'm really mad. The index has crashed 33%. Nobody know how COVID is in the next 1 year. There's absolutely no vaccine yet. Nobody know anything, okay, about this lockdown, how long it will be. But that is the bottom. That is the bottom, okay? So let me share with you. 10, 15% is a mild correction. And S&P has dropped 15%. But I'm not caring about S&P now. I'm caring about the tech stock. I'm caring more on NASDAQ now. Any index that dropped 20%, there'll be a big support there. Make sure you buy at 20% drop. And if you know the figures now, okay, 16,700, anybody got calculator, please help me. Multiply by a factor of 0.8 is 20% correction. Okay. I think if you have never heard about, okay, me talking in Facebook Live, you may have not known this, okay? You may have not known this, but it's very important thing if you want to know where is the support, okay, of the whole entire market, okay? Anybody can show me the figure, 16,760 multiplied by 0.8, you get that 20% correction figure. Please show me. Okay, Elisa, yeah, you got it, okay? I think 13,400 roughly, right? Or 13,360, okay? Alan said 13,000, almost 13,400, okay? Let round off, okay? Almost 13,400 point. And guess what? That day it reached 13,004. That day when Russia declared a war, that is a 13,004. It's almost like the fund managers also use a 10, 15, 20 correction. Okay? Most likely the fund manager come to my class before. Okay, I guess. We are looking at the same thing. We are studying the same. We are using the same calculator. The moment it reached 13,400, yeah, maybe it dropped another 400 points. Okay, maybe because the retailers keep on shorting and shorting. Okay, or some fund managers still recovering. Okay, but that is almost the near to the low. That is the low. Okay, 13,400 points, and that's why when people are so fearful in the war, the fund managers are already buying. Who are the people? Who are the idiots that buy when you declare a war? And let me tell you, it's not you or me, the retailers, right? The gung-ho people. Who are the gung-ho? The Wall Street, they have tons of money to burn, billions of dollars. They try to buy Xylo when there's good earnings. They try to buy the Upstart when there's good earnings. They try to buy the Cathy Wood stocks that drop 80% its value. They try to buy Apple. Okay, although Apple did not drop much, by the way. Okay, they try to buy back the Microsoft. And that very day, a lot of tech stocks bottom. And I do understand that yesterday, you may say, Daniel, yesterday Nasdaq also dropped, Nasdaq dropped quite a lot, 100 point, 100 point. Okay, that's a small drop compared to that high volatility that happened that day. There is huge recovery. And of course, this is a long tail candle, by the way. If some of you study candlestick, and I urge you, go and buy some books, go and read some materials, okay? There is a huge candle. There is a huge bull market reversal candle there, okay? That's almost like a long tail there, okay? So it's a very big candle there. So I would expect there is a strong support there at 13,004 from now onwards. Of course, in a market reversal, there may be such a thing that's always happening, or most likely that, okay, most of the time it may happen. We call it a double bottom. So can you please write down this word called double bottom? Okay, there might be some double bottom that may be happening. I don't know. Okay, if let's say, okay, there's, okay, seriousness, okay, let's say maybe, okay, really, okay, like US and Europe, okay, NATO really go out for full war fight, okay? Yeah, it may go back down again, right? But likelihood, okay, is that most likely 13,000 to around 13,004. There will be a strong support there, okay? And by the way, when you buy stocks at near the bottom, should you go in all in? Can you please tell me, should you go in all in and buy now? Yes or no? Okay? A lot of people say, Daniel, you say bottom, all in already. Okay? No. Because we need to test the market, right? Slowly accumulate, okay? Okay, slowly accumulate your shares. You don't need to buy all in, right? Nobody asks you to go all in and buy shares. Slowly to buy. Okay, because this market, yeah, it did recover. There's ample chance in the near-term future. I expect second half will be better than first half of the year. I expect it to be better, okay? Because of 5G. There's one thing called 5G. People forget about 5G. You know that 5G will be implemented by the end of this year in Singapore. Half of Singapore will be 5G enabled. Okay? So, I would say you accumulate along the way. And today I want to share with you. In stock market, there's always something called the average up. You don't have to average down on all the stocks that crash. You can do average up on good stocks that keep on going up. You can do average up, okay? So you don't need to go all in, okay? If you are really uncertain about the market now, you feel a bit of fearful, test the water first, right? Okay. Okay, so my point to you today is now may be the time to accumulate tech stocks. Even if you don't accumulate, I would say put it in your watch list, please. Put down the good tech stocks that declare good earnings this quarter. Just now I did mention a few already. I don't know whether you keep track or not. Okay, the stocks that suddenly jump up because of good earnings. What happened? Russia-Ukraine episode is still around, and people are by the way, interest rate haven't rise yet. Interest rate will rise this month, right? So what happened? Aren't we afraid of the high growth tech stocks that can't pay off their bank loans in the next few years? Aren't we afraid of Xylo bankrupting its own company? Okay, cannot pay off their loans. What happened? Okay, and let me tell you, all these are fabrication. All these are news that is created by Wall Street to do hedging. Okay, they manipulate the whole market to let you think that in the interest rate rise environment, this stock can never survive. Okay, and let me tell you, if these stocks cannot survive, you won't have Facebook today when interest rate rise. Okay, you won't have Apple today, you won't have Google today. They would have died many years ago when interest rate did. By the way, Google went through the internet crisis, right? And it survived. Okay, it did not go bankrupt. And in the internet era, after which interest rate rise to 5%, how do they survive at such a high interest rate when it's a high growth tech stocks 20 years back? Think about it. They will never die, okay? They will survive. Basically, they do sell products now. They are selling like hotcakes, okay? So this is my view on war. Today, my job is to pacify you, okay? Is to share with you, don't be blinded by news. Don't go and read what analysts say. Yesterday, I opened CNBC, an analyst still tell me that it's a bear market. I really, hey, please don't buy. Now it's a bear market. I would rather go and buy Walmart, the unsexy stock, the value stock. And let me tell you, you buy Walmart 6 months later, you might regret, okay? 6 months later, you might regret, when Zoom goes up 100% its value, okay? So, my view on this war. The sell on expectation, buy on news is happening today. So can you please write down? You must know this. The market has already created an expectation of war long before we know. You might think it's out in the news, okay, maybe 3 weeks back, 2 weeks back, okay? But I'm sure news has already been leaked out. Tension has already happened, okay? Wall Street is better than us in sourcing out this info, right? So sell on expectation, buy on news has already happened. So that's why before even the war comes, the market already fall. That's why on the day of the war, declaration of war, the market did rise back. Okay? Number two, today you don't have to be afraid of a full-blown nuclear war. Putin is just using a scare tactics, of course, over the weekend to say that they are on high alert. So all the countries today, okay, are afraid of the full-blown nuclear war by Russia, right? So I would say that Putin is sane enough. I think he's still in the right frame of mind, by the way, okay? He's still sane enough to go into a full-blown war. Why? Because he don't have money. Russia has been sanctioned for many years, 2014 until today. So if you do business with Russia, I still remember in Singapore, there are two businessmen that do business with Russia and today, and they are jailed because of it. So today you're a businessman, you better don't do business with anything got to do with Russia. Don't support them in any other ways, alright? Don't sell them anything, okay? Basically, US will come for you, okay? So basically what happened is their lack of cash. And the only reason they can survive this war, the only reason is because of crude oil price rise. So I would say they play a big game. During COVID, they take the chance, push down crude oil price together with Saudi Arabia to less than $0. Negative $40 per barrel, right? Negative $40 in the COVID era, right? In the COVID month, right? The April, okay, went below negative 40, jack up their inventories and store in their warehouse, and today push up to $100 and go for war. They need the ammunition, they need the money, okay? So they already make a lot of money in crude oil, in commodities, in natural gas. And of course, today you're talking about natural gas pipeline, right? So they make their money from that, but it's never enough. Do you know one missile you go and fire, it costs you how much? Okay, millions and billions of dollars. So their economy is in deep shit. Okay, so I would say that this thing called the high alert may be just a scare tactic, okay? But it's enough to put all the NATO countries worried, okay? It's enough to cause US, Europe, and the NATO to be worried, okay? They're worried about this so-called madman, okay? And that's why they don't dare to help Ukraine regarding this. Because you help Ukraine, you don't know what happened, okay? After which, right? But today, Russian economy don't have the capability to go into a prolonged war. And I would say that's also one of the reasons the last 1 week, they find it so tough to conquer some cities. They find the resistance so tough, okay? Because there's no more morale, okay? There's no more money, okay? The soldiers, again, have not much to eat, perhaps, okay? So that's why it's in low morale. You can go and study some of the things that are commented, okay, in some news, right? Low morale now, okay? Putin has low morale. The soldiers are fighting for Putin has low morale, okay? And by the way, although US and Europe are worried about this madman, the last few weeks, I opened a lot of YouTube, okay, these interviews that Putin actually gave. He gave a lot of interviews, by the way, to CNN, to CNBC, to his news channel, to a lot of news channel, by the way, okay, trying to speak about Russia, okay, the defense of Russia. Why do they do that, okay? And what is not being fair, okay? I listen to all the news. I would say Putin is a very, I would say, it's not a madman. The only two madmen around on this world today, I would say, is perhaps Kim Jong-un and Donald Trump, okay? That are the only two madmen, I think, okay? They're still around, okay? So take note, in the next election, okay, if Donald Trump comes about, okay, that's the madman, okay? That will go, okay, that madman, okay, you don't know what will happen, they may, okay, go and bombard, okay, Russia, okay? So if, I would say if, okay, the YouTube video is true, most likely, I think he's a peaceful guy. He speaks so soft. Putin speaks so soft. When the commentators are so-called so harsh on him, he take everything very calmly, you know. So it's like a very calm, peaceful guy, you know. So I don't believe that he will do anything that is really harmful. Okay. So far, I don't think he will open the nuclear yet. Okay. And definitely one of the reasons why he won't do that is because he don't have the support from China. Okay, if China is supporting them economically, this is a different ball game. Let me tell you, this is a different ball game. Okay, it might be world war, but this is not. China is not supporting them now. That's the key. Okay, that's the key. They don't have finance. They don't have a bank behind them. Okay, and today, if they can't use the SWIFT facility, everything, okay, they can't deal with Europe. That's it. Okay, I will say most likely in the next few years, you will hear silence from them. Okay, so I would say most likely this is short term. A short-term effect on the stock market. This is not prolonged long-term, okay? And this is my take for you. This war that you are hearing about is just temporary. Today, I want you to take note. The only thing I care for in the next few years, what might happen to stock market, is 5G. War is temporary, 5G is permanent. 有墨水，对不对？是我想出来的。Okay, of course, just a joke, okay? But that is really true, right? War is temporary. This war, I would say, is short-lived. Maybe, okay, of course, I'm not a politician, I don't know what's happening. Maybe Ukraine may stop, okay? They may now is holding a second time peace talk, okay, from what I know, okay, with Russia, and they say come to a consensus, and that's it. The troops go back, okay, or maybe let go of 1, 2, 3 cities, okay, to let Russia have it, okay. So they may come to a peace treaty. So this war, I would say, is temporary. Don't be afraid of war. As a stock investor, always look beyond this thing, beyond this short-term episode. By the end of this year, no matter whether there's war or whatsoever thing, whether interest rate rise, 5G will happen, and it will happen over the next couple of years. So 5G is permanent. And today, let me give you a bit of optimism amid this pessimism, right? The only war I would say that I'm afraid of in the next few years is not Russia, Ukraine. It's this thing called the metaverse war. So can you please write down this name? Okay, very important. As a stock investor, from now onwards, you must know what is metaverse. This is the only war I'm afraid of. There will be a metaverse war between China and US today. There will be a metaverse war between Europe and some companies, okay, or some countries today. There will be a metaverse war between the tech giants. And it has already started, let me tell you, okay? It has already started, okay? And this metaverse war will cause tech stocks to go crazy, okay? It's almost like 2020 happening again. And of course, talking about all the stocks, all the tech stock giants that can create a metaverse universe. Metaverse, by the way, is a holy grail word, okay? That has been coined, okay, I will say, by Facebook over the last 1 year, right? So, metaverse. Honestly, if you really don't know what is the meaning, I will beg you, go to YouTube and type in what is metaverse. There are a lot of people commenting on metaverse, and you see all the videos about metaverse today, okay? Basically, it's what we call a digital world, right? A digital universe, okay? A digital universe. Today, let me share with you. Facebook might create its own metaverse. Amazon might create its own metaverse. Microsoft might create its own metaverse. Same with Apple. Same with Alibaba. Same with Baidu. Same with all the tech giants have huge cash burn. Okay, they want to almost get the first iOS. Okay, the moment you get the first iOS, you get all the developers to set up shop in your digital universe. You conquer the whole world. So if Google and Apple are the conqueror of today, all the application in the world, they come out with Android, they come out with iOS. In the next 10 years, any giant that conquer the whole world of metaverse will make a lot of money. Okay, you get all the developers to set up shop in your metaverse world. You get a lot of money. And who are the competitors today? The 4 tech giants. Facebook, Amazon, Microsoft, Apple. These are the 4. I can't think of any. Okay, they have huge cash today to burn, to pay money to go and buy any companies that belong to metaverse. Okay, I know none except these 4 now. Okay, Facebook, Amazon, Microsoft, Apple. They have the ammunition, they have the technology, they have the hardware, they have some software. Okay, even if they don't have, they go and buy. All right, they are already in this business. Some keep quiet on it. Some shout out already. Facebook and Microsoft recently shout out the word metaverse. Apple in its last earnings shout out the word metaverse. They are going full force into metaverse too. The only company that hasn't shout out yet is Amazon. But don't believe that they don't have this capability. Jeff Bezos have it. He has tons of cash burn. It's a $1 trillion company too. Okay, they want to go into metaverse. They can. It's a matter of when. Okay. So who is the winner of this metaverse? I really don't know. Okay. So my take is slowly accumulate and buy. All 4. Okay. All 4. Okay. Of course, you can bet on one. And if it succeeds, good. Okay. They are the iOS of the world. Okay. But you may miss out on the other 3. So I would say these 4 are good. All the good companies are here. Buy. Okay. Accumulate over the next few years. So why is it there's a metaverse war coming? I call it the meta war. Okay, that should be your concern. That should be your concern. Don't ask what is happening to Ukraine. That may be gone in the next 1 month. This is the meta war that's happening in the next 5 years. Do you know Microsoft? They are lacking behind huge time to Google and Facebook in the meta war already. They are lacking behind in terms of innovation, in terms of software, in terms of hardware. They don't have the glasses. Okay, 2014, Oculus was bought by Facebook. Okay, I forgot for how much money. Okay, millions and millions and millions of dollars. They buy the glass company. Okay, the Oculus. Okay, the goggle. Goggle. Okay, Google also came out with Google Glass many years back. Okay, they are lacking behind. Okay, they are lacking behind. Okay, and by the way, in the meta world, you need goggles, you need glasses. Okay, you need the glasses to know where you are, to give you the picture of the digital universe so that you can fly to space. Okay, you can walk into a McDonald's that is digital. Okay, you can go and shop for your clothes. Oh, you need glasses. Okay, they are your pair of eyes. Okay, so basically what happened is Microsoft, they're lagging behind. Never mind, I use full cash and buy. $68 billion is done to buy a metaverse company called Activision Blizzard today. Full cash, by the way. This is not even borrowing money from banks. Okay, people are still afraid of some tech stocks borrowing a lot of money. I've got full cash, trillions of dollars. The only company that went trillion of dollar today in today's world are all tech companies. They are not real estate companies. They are not energy companies. Okay, they are not bank companies. They are all tech giants. Who got the most cash, you tell me? Okay, Microsoft today go full in, full out to go and buy Activision Blizzard, 68 billion all cash deal. Okay, this will be the largest acquisition, followed by LinkedIn in 2016 for $26 billion. This is 3 times what they spent on LinkedIn. Okay, why? Because they want to buy into metaverse technology, and in a lot of what we call news that was let out by their company, okay, the public relations news, okay, Microsoft did say, I buy Activision Blizzard not really for its games. I buy Activision Blizzard because they got technology to metaverse. I would say the only industry in the last 5 years that really tap into metaverse is gaming companies. The gaming companies are wearing Oculus to play games, to play Minecraft. You can go, by the way, if some of you don't know what is Minecraft, okay, in the past I don't know, okay, but it's like hotcakes because Minecraft itself is a metaverse world. You can do anything in Minecraft, right? This is a game, by the way. Go and read out on some of this. You can create an empire, you can create your own property, and you can sell to others, right? People are willing to pay money to go and buy your property, right? You can create anything basically in the digital world, okay? Ever since NFT, let me tell you, anything I think can happen, okay? Anything can happen. I also don't know what is NFT, okay? Anything can happen in the metaverse world, okay? And today, let me read out one article to you, okay? So that you get to know a bit what is this meta world today, right? And by the way, Disney has gone into metaverse world, okay? Disney is already employing a high-level executive, a new executive to be in charge of the metaverse. They are going to come out with Disney World today that is in metaverse. So you can ride your roller coaster in there. You can shake hands with Star Wars figures. You can go to their live stadium to watch a soccer game through ESPN metaverse store or where stadium. They can create a stadium out of nowhere. Okay, by the way, okay, so that's called the metaverse. Okay, and today you know what happened? Okay, I am a soccer fan. I can't fly to UK in Manchester. Okay, Manchester United is my favorite club. I can't fly there to watch Ronaldo play. But in the metaverse world, I can. I can communicate with my soccer kakis. I can talk to them. We can go to the Manchester Stadium in the universe world. I can be an avatar there, right? And I can communicate. We can eat popcorn or drink beer. That is the metaverse reality world. It's already happening. It's already happening. Just that we might not know. The gamers will know, let me tell you. Okay? So let me share with you. This is a good. Can Facebook monopolize the metaverse? I would say the number one company that is more advanced in the metaverse field will be Facebook now, followed by Google and the rest of the companies. Okay? Apple and Amazon might be lagging behind. Okay? But the first company that actually gets started with this vision, called the Meta Vision, is Mark Zuckerberg, Facebook. Okay? So that's the reason why last year, they even changed the name Facebook to Meta to show you the business direction. Okay? And that's the reason why today Congress is is now trying to lay laws, okay, to tell them don't go and acquire all the metaverse company. This is Anti-Monopoly Act. So who is starting this anti-monopoly accusation? Think about it. They are the Apples, the Amazon, the Microsoft that might already be losing out. They are afraid of losing out to Facebook. So they get the Congress to go and sue them. Who are behind the scenes? I don't complain about Facebook, right? You don't complain about Facebook creating a metaverse company, okay? Who are the people, the tech giants? They are already lagging behind. Facebook got started in 2014 by spending, I think, if I'm not wrong, billions of dollars acquiring this Oculus, right? In 2014, the virtual reality headset, right? And their headset is so advanced. There are many versions of headsets now today, okay? They are used by gamers. So I want you to note, okay? They are quietly buying up companies in the metaverse. They are quietly buying up companies in the metaverse without you knowing. Why? Because they are afraid Congress will find them. Okay, Congress will sue them, break out their company because of anti-monopoly. They are already secretly doing behind the scene work, spending billions of dollars acquiring all these companies. Microsoft, they are not worried about anti-monopoly today because it's a new field for them. Okay, it's not like software. Okay, so they did undergo a anti-monopoly accusation like 20 years back. Okay, during Bill Gates' days, but now it's gone. Okay, so that's why they can shout out 68 billion buy a metaverse Activision Blizzard. Okay, but now they are quietly doing it. Why? Because Facebook knows this. Okay, they are already under accusation. They are already under accusation because of privacy infringement. Okay, big data infringement. Okay, hackers can hack into their data and obtain free data. Okay, so they are already under huge what we call political pressure, right? So they don't want to create any pressure. They secretly acquire companies. Okay, from what I heard, they spend billions and billions of dollars. Okay, now so they are I would say more advanced than other companies today. Okay, now I want to show you this. For the users, you and me are the users. The debate is also who will control the metaverse world. Many leading technologists says the rise of the metaverse is akin to the invention of the mobile web or the internet itself. So first mover advantage, okay? Who conquer, okay? Who move into internet, okay? At the early stage still survive, right? Okay, it's very difficult after which to go inside, okay? So similarly, okay, mobile applications is the same thing, okay? Apple is the first mover, then followed by Google Android, okay? So what Meta or Facebook want to do is they want to be the tech giants of the future. They want to control metaverse so that all the developers will develop their store inside this metaverse. Okay, so basically it means McDonald's will be there, H&M selling clothes will be inside, and if Facebook can create an audience as big as their social media company, okay, in the metaverse itself, Amazon will definitely have a place there. They don't have to listen to Android anymore. They don't have to listen to Apple anymore. Okay, they don't have, to be disabled. Okay, recently there's a disabling of their so-called their big data analysis, right, of their clients, right? So some people in Washington today will take action, okay, because Meta has the chance to corner the emerging market once again. So they already corner the social media market. They bought into WhatsApp. They bought into a lot of companies, okay, so that they control the users, right? They are trying to do the same thing in the metaverse world today, okay? And by the way, that's why Wall Street is now studying whether they want to sue them for anti-monopoly, okay? So today I want to share with you. If some of you did pay attention to this YouTube video, you just go to YouTube metaverse, you type in, you see the first video by this company called CNET. Okay, everything Facebook review about metaverse in 11 minutes. Okay, I read through the whole video.
Time for us to
but let me tell you, you don't have to go through everything. It's good to know the last 10 seconds. I would say it's the gist that he's trying to lay. He's trying to talk about. Let us take a look. I'm going to open up my sound. See if you can hear.
We have to fit hologram displays, projectors, batteries, radios, custom silicon chips, cameras, speakers, sensors to map the world around you, and more into glasses that are about 5 millimeters thick. So we still have a ways to go with Nazare, but we are making good progress.
Sorry, yeah?
We'll unlock.
Okay, I think it's not here.
Hologram displays, projectors, batteries, radios, custom silicon chips, you can easily just put your game onto the table and you're off.
Okay, maybe it's not the right video. Sorry for it. Not 4 months ago, just a few days ago. Should be Mark Zuckerberg. Okay, let me type in. Okay, this video 6 days ago, sorry, yeah.
And because these worlds will be dynamic, thanks world model that, as we have shown today.
The last 10
today, everyone, I hope you enjoyed this look inside the lab. And if you're interested in pushing the state-of-the-art in AI, whether that's building the next generation of assistants for the metaverse or creating the universal language translator, I hope that you'll consider joining us on this journey and be part of building the future.
So what I showing you is he's calling out to all developers and businesses of the world. It's almost like Apple many years back, okay, 10, 20 years ago, when they come out with iOS, they get all the developers, everybody, all the businesses want to make money, okay, by selling applications, okay, enabling applications in its own iOS world to develop their applications and put there. Okay, they can help you to do the coding, to do whatever thing. They will tell you is like, okay, tell you everything so that you can put your own store inside there. Okay, he's already doing it. This is a call for all developers who want to go into metaverse to set up its own company inside there. And that's why McDonald's is already doing it. McDonald's already got a place in metaverse world in Facebook. Okay, that's why Disney want to do it. Okay, of course, it's a matter of where they put in the metaverse world. Do they want to come out themselves or do they put in the Facebook metaverse world? Okay, so it's already there. Okay, this is a call for the whole world to put their applications inside Facebook metaverse. And if they can get the users to use them, as more developers, more businesses are there, users will use them. Okay, today in the metaverse world, you can go to anywhere to watch a movie. Okay, you can go to any place, okay, for a suntan. Okay, you can have virtual office. Okay, so it will change the whole world. So my point to you is, in the next few months, I want you to take note. Those tech stocks that got to do with 5G, those tech stocks that got to do with metaverse, those tech stocks that got to do with perhaps self-driving technology, you should look at it. You should look at it, especially when these tech stocks has crashed. Okay, the big giants has dropped 20 to 30, right? The small company, medium company has dropped 50 to 80% its value. You should study all these stocks. Okay, forget about the real war in Ukraine, Russia. Take note of this meta war. Okay, meta war. Okay, so that's all. The last thing I want you to take note. Okay, today I think I run out of time, so sorry for it. I want to give you some comments about the outlook because you may be a bit worried about stock market, but I would say this is one chance this year. Okay, that will allow you to buy stocks really cheap, really cheap. Okay, dirt cheap, I would say. Okay, for some shares. So if you want to know more about stock tips, okay, if you want to know what are the shares you must look out for in the metaverse era, in the 5G era, if 5G is launched at the end of the year, what will happen to tech companies. Okay, which are the companies that will benefit directly from this 5G era? Okay, so if you want to know all this, I will recommend you to join our stock investing masterclass, whereby I'm going to discuss the following topics. Number one, what are the metaverse tech stocks to look out for in the next 1-2 years, especially after this market crash? Number two, the great 5G tech boom in second half of the year. Like what I said, not only metaverse will benefit, the self-driving technology will benefit. The AI, artificial intelligence that Mark Zuckerberg is talking about, okay, to come up with metaverse, you need AI. You need artificial intelligence. You need the glasses to talk to you. Okay, you need the glasses to show you the figures, okay, the place, okay, or visually, okay. So you need artificial intelligence. What are the companies that will benefit from this 5G tech boom? Number three, how to identify the bottom of correction. And I will say correction is already around the corner, right? Okay, the bottom is already around the corner, but I'm going to share with you how you apply to stock market, right? Stock, individual stocks. How do you know that is the bottom? Okay. Number four, how do you build your retirement portfolio? And number five, the three important tricks of a successful investor. Okay, so I will say this weekend, if I'm not wrong, and next week, we are going to have this stock investment masterclass. So seats is really limited. We limit to around 50 seats. Okay, maximum 50 seats. Okay, so if you want to know in the next few months what are the stocks to buy, and most likelihood, most of the stock that I discussed may have already bottomed, okay, then all you need to do, click on the webpage link, okay. For English class, just go to this website. I think my colleague is dropping a message there, okay. Just click on that link, www.dl-investment.com/en for English. Chinese, www.dl-investment.com/Chinese, okay, CN, okay. So you can come to either one. I'm going to speak to you, okay, about meta war. Okay, I'm going to speak to you the opportunities that will happen in the next few months. Okay, forget about interest rate rise, forget about inflation, forget about Russia-Ukraine thing. Okay, this is the thing you must be concerned of. If you miss out 2 years ago, like what I said, the bottom, this is another chance for you to buy stocks cheap again. So thank you so much. Hope that you get some value out of this session. I hope that it calms your nerves. Okay, if you're holding some shares, okay, most likelihood, okay, there might be some bottom forming. Okay, so hopefully you will do well in the next 1 year. Okay, see you again in the next Facebook Live, YouTube Live. Thank you, and please help us to share. Okay, there are a lot of things that I touch upon, and don't miss out on these opportunities. Okay, share it with a loved one, share it with your stock khakis. Okay, about the message that I want to deliver to you today. Thank you so much. Bye bye. See you around. Okay, do click on the link. We have very limited seats. Okay, very limited seats. Okay.